Let's take a look at some cryptocurrency charts on this setup Monday, this glorious, glorious setup Monday after a Friday in which the liquidation engine was on overdrive. We had what was likely a predatory individual who pushed the book down in their favor, seeing OI what it was, seeing potential liquidation fodder. Now, that isn't to say that Bitcoin wasn't already weak going into Friday night, but they didn't do it during the day. They didn't do it when legacy markets were open. So live by the 24/7, die by the 24/7. Not that that would have necessarily saved us here, but when we're down 25% in a day, that's a bit of an interesting situation. Now, on a technical level, the litmus test is, are we above the cloud? Are we above the 200? The answer to both of those questions today, right now, is no. We are not above the 200. We are not above the cloud. Now, you may want to buy the dip, which I don't necessarily recommend. Not that this is trading advice. We have mean reverted and then some. But ultimately, for the week and the rest of the year, which includes the rest of Q4, I certainly am not blanketly bullish like I was leading into Friday, because we were not surging bullish on trend metrics, but we were salvageable. We've gone from being salvageable up here to being in this murky abyss, quagmire, turtle soup, quicksand situation with 24 days left to the year or something like that, with a bearish Q1 expectation, trend metrics not on our side. And this is just BTC. I'll get to ETH in a second, but we had our chance, we had our highs, couldn't do it, got no volume, and this is where we are in the moment. Interestingly, we stabbed right through the 50s into the 40s. Some exchanges hit 38K. It got ugly when something like this happens. All of the market makers, the people who provide liquidity, pull everything as well, and we see this fairly often. We certainly saw it in May in this wick here, but saw it here as well. The market makers will know when it's automated usually, so they'll know when liquidations are happening. They're not going to want to just blindly catch knives. They want to ping pong orders back and forth. They don't want to be involved necessarily in being the hero that stops this market from collapsing further. So it's not their fault. It's just that's what happens, when there's no like organic book depth beyond 5% one way or the other. And then the market makers leave and then you get liquidations. This is what you get. So in order to recover this from a bullish perspective, it needs to get back above 57, 58. And that's generous. It probably needs to get back to 60 to be considered bullish, or we just wait until Q2. I mean, at this point, I don't expect much out of BTC until Q2, because again, I don't expect Q1 to be bearish. We actually retraced the entirety of Q4, which is pretty impressive. This was the Q4 open over here. We traced the whole thing. Now we wicked up from that, right? We can close certainly higher, but that isn't the expectation. The expectation here is we probably fall out of the cloud. We probably eventually have a death cross on the 15 to 200, which is a ways out. But you can see how this gets bullish again. It's the same story every time, right? We had this bearish edge to edge. We're breaking below the 200. We're below the cloud, or we will be most likely in the next week or two. And then we're just bearish. The expectation is bearish until we're back into the cloud again, back above the 200. I feel like I'm on repeat most of the time, but that's true. That's what it is. So that's the litmus test. Last video I said I'm not worried about BTC so long as it's above the midline of the pitchfork. It is now distinctly below that midline. So we've gone from a salvageable mess to a more modest expectation leading into the end of the year. Like I said, we had our chances here. We were in interesting territory, just did not get any buyers at that level to push us higher. So where we sit now, it's not all doom and gloom. I mean, we can go down to 25 and be fine, realistically. I don't think anybody would be happy with that. That's another 50% decline, obviously, but it's very much a wait and see. There's just so much to recover from a 25% down move like that. Definitely going to take some time. So I can start to get more bullish when we're above this midline again, when we're above the 200, above the cloud. But as it sits now, that 100K expectation, certainly extremely unlikely at this point in time. And as far as the MA multiplier, this is the 2-year MA down here, midline 5 times the 2-year MA in the red here. And You can see 28K is also sort of that buy zone historically. Anything below that for BTC has definitely been an excellent buy. Now it may take 4 months to get out of that zone as it did in 2018, 2019. And I'm certainly not calling for 28, 25. Let's be clear here. But, we get a couple more 50% moves on a day and there, boom, boom, shebang, there we are. Back there down at 28. I've had a few people suggest to me that this is potentially a head and shoulders, shoulder head, and the incoming shoulder. Certainly a possibility, worth watching, not an expectation at this point in time. But we can actually get pretty low and still be okay, even on the 200 week. I mean, the 200 week moving average has been the actual bottom most of the time. We can go all the way back to 2015. We don't stay below the 200 week for very long if we get down there. Again, I'm not calling this. It's just when you go from all-time highs to being down 25% in a day or two, it's certainly less bullish than it was. So it's important to be realistic and have expectations going forward. This is definitely not 2017. I saw a lot of people comparing it to that. No, I'm happy to be wrong, but we didn't range for basically a year in this fashion before that run up. I could say, yeah, well, Josh, we ranged here from 2015 to 2016 in an ascending triangle. That's correct, but there was also a very distinctly bullish bias there. Here we have a bunch of nothing. We have a pending head and shoulders potentially, and we have a pending M double top. It's maybe not as bearish as like the end of 2018, where this was definitely a descending triangle, but it's certainly not a parabolic up move like 2016, 2017. So for Q1, I do like, let me get to the pivots here. I do like whatever the pivot is, whatever the S1 pivot is. Like if we're going to be bearish for Q1, let's say we're bearish Q1 and then bearish all of 2022, whatever the S1 pivot ends up being, the yearly pivot on January 1st, that's certainly a potential target. You can see we hit that in 2018, almost to the dollar. These print the first of the year. They're based on mathematical highs and lows of the previous year. So it'll be very interesting where those pivots end up. Certainly something to watch. And the cloud on the weekly is totally fine. Really, we're not in a bear market, like a real deal bear market, until we're below the weekly cloud. We may get chop, we may get non-bearish price action or non-bullish price action. But this thing again is still relatively salvageable. That doesn't mean mega turbo ultra long 500K target. It just means it's not carrying a mega bearish expectation yet, even with where it sits in the cloud. Not carrying a mega bearish expectation. The expectations, though, certainly much more bullish, or much less bullish, sorry. Keep mixing that up, than it was even a week ago. Again, it was salvageable up until the end of last week. Something else to watch for into 2022 is the Mt. Gox coins, which may or may not have an impact on the market depending on the percentage of which those coins have already been sold off to hedge funds, which have been buying those claims up for years now. It's certainly possible that it'll just be a non-event depending on how many of those coins have been sold off and how many of those buyers just don't want to sell. Definitely a yin and a yang between a decentralized distribution and a centralized distribution, hedge funds versus thousands of Mt. Gox users. But that's a ways off yet. But we'll know way before leading up to that event when it happens. As far as dominance goes, still potentially triple bottoming here. Not really tradable. I don't think this is bullish or bearish one way or the other. Just worth watching because ETH-BTC is ready to, at least looks like it's ready to just continue to scream higher. Here's ETH on the daily, on the cloud. Definitely looks better than BTC does. The trend looks at risk because it's getting this bearish TK cross. You can't really see it here. So this would need to pull up significantly in order to cancel that out in the near term. But the way this sits on trend, perfectly fine. Bounced into the cloud, bounced above the 200-day moving average. This could very easily just continue from here. I mean, the trend is still bullish. Litmus test. Above the cloud, above the 200, done. End of story. Okay, game on. Expectations the same as far as targets between 6 to 7. Certainly possible. And that would certainly satisfy the ETH-BTC chart, which continues to look like one of the best charts in crypto. Post-ascending triangle breakout, or whatever you want to call this. I think it best fits an ascending triangle. It certainly broke up extremely early Typically these break up around 3/4 full, just in general for patterns like this. And that's certainly an early mover. The measured move targets are between 0.9 and 0.1. But it would be it would be so amazing if we start to get flipping calls when we break 0.1, and then we just get these mega wicks on a weekly to like 0.12 to 0.15, and then it's just death from there. That would be the most entertaining outcome. I don't know if that's going to actually happen, but I do like a move to 0.1 still. Hopefully that doesn't happen, as both ETH and BTC are declining, but ETH just slower, which is basically what happened over the weekend. Some other charts that look decent. Matic still looks okay. Again, it's above the 200. It's above the cloud. I don't have the 200 on here, but my spidey senses tell me it's totally fine here. Does this look amazing? Not really, but it has been ranging since May, and it is also showing signs of ascending triangle type of stuff. The measured move here would be between 350, 450, somewhere up there, depending on how you want to measure this. But this looks completely fine to me for bullish continuation. Solana looks at risk of trend reversal, as it is inside of the cloud now and is risking this move down to like 140-ish. All this analysis is always the same, right? Are we above the cloud? Are we in the cloud? Where's the 200? Do we have a chart pattern? We looked okay leading into what was a terrible past couple days for everything, really, on Solana. Now, is this salvageable? Yes. Until we have a bearish TK cross, then it's probably too early to call this one a short entry signal. But like on BTC, here is a great example. Ideally, you get a couple days before this thing just dumps into the cloud. We had like a day, maybe. You get your TK cross with price in the cloud, and then it was good night, like immediately, right? That's like the nightmare scenario, because you can't really react to that very well. Whereas April, May, you got plenty of time. Now, it was a doom candle into the cloud when it closed, but ideally you want some sort of time to react. And this is setting you up to say, hey, things aren't looking so hot, certainly not as good as they did leading into the weekend. AVAX looks tired, but also fine. This isn't something I ever long that looks like this, below the Kijun and above the cloud. Trend looks okay. The target is probably still fine. The path that it's going to need to get there is going to get ugly, because it would have to swoop up the cloud into end of year to get to 200. Not saying that's an impossibility, it's just an unlikelihood. So I certainly like charts like Matic over AVAX, DOT below the cloud, below the 200. That's it, see you at 17. Maybe this perambulates around over here in the 20s, but not a bullish expectation anymore. For DOT, Luna, you'd have no idea sort of that anything happened. And you'd probably not want to even trade this on the daily. Trend wise, it looks fine. It's just kind of weird because it's in this channel. So not bearish, but not anything I'm going to touch, most likely. Anything that goes straight up and then sideways is tough to trade on higher time frames. So I would watch this one on the 4-hour if I was trading it. BNB still looks fine, trend wise, above the cloud, above the 200. Working on this M double top, sure. And a lot can go wrong for things like Matic or BNB, but the table is set. Everything's ready to go. We just need not everything to crash together or continue crashing. If BTC drops another 25%, all these alts aren't going to be saved. They're all going to get smashed. But when I see charts like this that are looking decent after the BTC down move, and I'm thinking, we probably don't have the OI for another 50% down here, at least in the near term. So things like BNB certainly have a chance towards the end of the year. FTT, on the other hand, does not look like BNB. It had a shot in November, but that got faded rather quickly. Was below the cloud, telling you this thing's in trouble below the 200. No pattern just yet. No divs on anything, by the way. So this is not bullish. This does not hold a bullish expectation. The expectation here is that BNB actually outperforms FTT for the remainder of the year, at least. And this thing got crushed, just like BTC did. CRO on KuCoin. I just randomly looked this up because I know it was up to $1. It retraced all the way down to 36 cents. Another great example of empty books. Just an insane down move extremely quickly that gets bought up. But this is another one where it's up, I don't know, 4x in a month or less. trying to long this, I think at this point it's a bit silly. It went up way too fast. Anybody who was in profit likely got out on the way up, at least the smart people. And now anybody who bought on the way up is probably underwater and is going to get increasingly nervous as we go down here. Then last, I'll just mention the DeFi perp because it also looks absolutely smashed. It got back into this range here, so it's safe in the meantime for the range, but ranging is not bullish, so it's certainly not as bullish as it was last week. This thing also broke below the cloud, broke below the 200, broke below this VPVR level. It's always interesting how like none of these supports matter when we get stuff like this, where it's just a skewer absolutely straight to the core. On-chain liquidations, just pushing everything down. And there's nobody on the other side of the book who wants to buy it, at least. So stay safe out there into the end of the year. That's all for this one. Like, dislike, comment, share, subscribe, and happy trading.